Hey folks, Thursday, 20th of January 2022. So this morning we're going to have a little chit chat about 88 Energy, symbol EEENF for those of you who are uninitiated or not looking at this company. This is an Australian wildcat company. So you call a wildcat oil company a wildcatter because they're really out there exposing themselves and their investors to the opportunity of striking oil, right? And you're not a wildcatter if you're an integrated company like BP or Shell, where you own massive facilities for from everything from upstream, which is exploration and production (E&P), all the way down through refining to retailing, and that's a vertically integrated oil company, or what in the industry they call them the marquee companies, right? Like think the Seven Sisters, BP, Chevron, Shell, Exxon, all these guys, right? But the wildcatting, think There Will Be Blood, that film where you got Daniel Day-Lewis, Daniel Plainview, I think was the guy, and he's out there, he's wildcatting, right? He's digging around in the dirt trying to hit oil, and essentially that's what 88 Energy is, and there are many of these companies around the world. Also, you can get wildcatters in the mining world as well. But let's come back to what we're going to look at here. So there's this is important timing wise right now because 88 Energy found potentially found oil last January, February, and coming into the close of the drilling season in Alaska and Purdue Bay, where they have leases on several territories and several sites that are nestled in around where ConocoPhillips are also drilling. Now, there's maps and studies and all sorts of stuff that I could bore you with, but essentially we're just going to go over the top tier stuff. If anyone wants more information, and we do have a lot of information, do send me an email, tim@duggancapital.com, or join us in the Discord room where there's a few of us are trading this company. Why am I talking about this? Because last year they potentially found oil. They sent those samples for analysis. Unfortunately, the well caved in at the time, and the season was closing. They had to get out of Alaska as the thaw was coming in. While the summer rolled through, the analysis of the samples came back as positive, and several estimates came in for the amount of oil in the reservoirs that they're drilling up there. They're now going back to drill and complete more further drilling, test drilling on the Merlin One on a site in Purdue Bay. It is on land though, this rig, and they're hoping to have this drilling completed by the end of Q1. Okay, so the schedule is already released and out there, and what also has happened is 88 Energy has been listed on the OTC XB. It's a new exchange, really, that's essentially exposing 88 Energy to more investors. So you've got it sort of double bubble here, where you've got the oncoming drilling campaign with already promising results. All right, to forecast on that, and you've got exposure to new investment markets essentially. In the meantime, since sort of last February and today, all right, January 20th, 2022, 88 Energy has actually cleared all their debts. They are debt free as an oil company, which is extremely, extremely rare, especially in the wildcat space. Not only that, but the contract driller that's going to be drilling is actually taking equity shares for in lieu of payment, because they've seen what's down there, right? So, well, supposedly, all right, that's conjecture. Anyway, let's go and have a look at the charts, and then we're going to go and have a look at the pricing model of what should be should they strike oil, what would be the indicative share price. Okay, now let's just have a look at the charts, right? So here we are on 88 Energy. This is a daily bar for 1 year, okay? Now, I'm not counting what looks to be a pretty fantastical fat finger trade here of a high of 0.2. Obviously, someone came in and meant to sell 0.02 at this time, and they forgot to put in a zero, right? Forgot to put in a zero. Let me zoom in there, right? So they forgot to put in the zero, and they got filled on a short at a massively high price, which is great for them, but it's also terrible for the person who bought. Equally, somebody could have fat fingered a buy and put in to buy X amount of shares at 0.2 instead of 0.02. So a bit of a mistake there, and we're not really going to account for that in our analysis here. Okay, what we do have though is a bit of a trend from the low, the 12th of Feb last year, and going through to a low that we had on the 17th of June last year. Now it's very hard to see this chart, right? So I'm going to really open this up quite a bit here, and we can look at the chart a little better like this, and I'll take my mug off the screen. So there seems to be a little bit of an accumulation floor in this market, which is coming in at 0.023. All right, 0.023 just here. And that was the high of the 21st of June. Now, I say that because I didn't really see this accumulation zone until we had this activity here. And I'm going to zoom right in. This is my Thinkorswim chart. Right in. Well, it's a little bit hokey looking there, but okay. So we had this high. It pushed on that high again a couple of days later on the 28th. Pulled back and pushed again, and with a floor on the 1st of July, and again that floor couldn't be broken on the 8th or the 13th, and that's why I have an accumulation floor here, because basically any sellers that were interested at 0.23s then got completely wiped out on the 1st of July, and then buyers taking over, really asserting control there on the 8th of July and the 13th, and again on the 18th. But they let it go on the 18th, and it drifted back down below the accumulation floor, and we really through really August, September, October, November dead. Because really the whole market's just passively accumulating shares below this accumulation floor all through leading up to now, where we're going into near the schedule for re-drilling this this site. Okay, and this re-drilling campaign will be the one where we get the answer whether they're striking oil or not, right? So the accumulation floor, I'm still tracking this at 0.23s. Now hold your roll here, because we're not up to date yet. We're only looking at October. Right, now let me go forward in time. Okay, so we go through breaching the 189s, and again cheap at the price, and then bang, we start to accumulate here on the 4th of January, right? First real day back for the markets. Bang, we're up again above the accumulation floor, and look where we sit now. We are still above the accumulation floor, but now we're testing the 0.29s yesterday. Sellers interested in that, people who have been suffering quite a while, maybe buying offside up here above the 0.29s, they're now getting out flat. They're getting rid of the heartache. They don't want it anymore. They don't want their wife telling them they're an idiot for investing in some wildcat oil company that they read about on Reddit, right? So their kids finally, they're going back to college because we got back to the 0.29s, and they've liquidated their shares. So a scary ride. It makes me think of the people that were getting balls deep long Bitcoin basically at 19,000, I think, in I don't know, about 4 or 5 years ago. Anyway, so here we are trading at the moment. Market's closed spot 0.2775s. All right, so this is all fine and dandy. Here's the accumulation floor. Is another accumulation floor. 189s. Fine, that's great, Tim. So where's this thing going? All right. Well, good question. All right. So to look at this market in a different way, we can use a logarithmic scale, right? So a logarithmic scale is going to account for the sort of real movement of the chart in a way relative to the prices here are not linear as we go up here, right? The prices are not linear. We see more the breadth of the market with a logarithmic chart than a linear chart. Okay, so we can kind of see how big moves are in relation to one another, right? And so you can see that if people were buying in at these highs at 0864s, I mean, they're probably looking at claiming back about 20% of that money right now, liquidating at yesterday's highs. Well, actually, I got to tell you percentage-wise what they're getting out. They're getting about 30% back. They're taking a haircut of 70 cents on the dollar here, right, by liquidating here, getting rid of the pain, as I say. And that's a very common thing for traders to do. They're uneducated as to where and when they should buy. They buy in on the highs, it pulls low, and they get scared like a rabbit in the headlights to liquidate the trade when they should have taken their stop, and they just close the computer and walk away, and next thing you know, it goes deeply negative, and they're probably taking a margin call most likely. Others will probably just hold the thing forever and say that, well, they're going to find oil next year. Okay, let's get out of this, right, and let's go and look at the valuation model. Now, this is a crude valuation model supplied by I just need to find out get in here if we can. There we go. This is supplied by a chap on Reddit by this is supplied by Wet Dirt Kirk on Reddit, and thank you, Wet Dirt Kirk. I hope that's not the same. Oh well, no, we have a Kurt, not a Kirk. We have a Kurt. Oh no, it is Kurt. Maybe this is Kurt in our trading room. Speak now, Kurt. You got to let us know. Pretty decent model. This is accounting for the amount of shares outstanding at the time. This is 10 months old right now. So there's one main thing to get rid of here is the debt, right? The debt of 20 mil here, right? We got to get rid of that. But the indicative share pricing it's already factored in a lot of the financial model here. Looking at the Merlin 1 Meridian, how much basically in terms of output they can get at the price per barrel. Now, you got the current price per barrel at $58 here, which is probably what it was on WTI 10 months ago. North Alaskan crude trades at about $4 to $7, in a range of $4 to $7 premium to WTI. So at market right now, we are trading. Hold on, let me just get this off my screen. We are trading at 85.12. So conservatively, let's just say 85 is our price here per barrel. 85. Oh, I'm locked here. I'm locked out here on this chart or on this spreadsheet, but that's fine. We could just go make a copy. Done. Let's make a copy and see if we can work with this here. Let's see, 85s. Yeah, we could work with this. 85s. And let's see how this affects everything, right? 85 bucks, right? Potential future price per barrel, 105. I think that's perfectly reasonable. The break-even price in this drilling area is 40 bucks. All right. And the profit per barrel, everything else is kind of put in here as a rough guide. Total shares outstanding. This is a little shy at the moment, but I'm going to put in a 0 for the debt, right? Because they have cleared the debt. Now, at the bottom of this sheet, we could, you can share this document. I will put a link to the Reddit post on below this video. All right, you can go and check it out on this document. and read all about the EBITDA and ABC versions, scenarios they're running here. But let's go down to the share price. All right. So a high share price, you're looking at indicative 1.99. That's $1.99. This thing is currently trading. It's currently trading at 29s. Let me just get that chart back up. At 0.29. Sorry, 0.278. Right, 0.278. Okay, 0.278. They're looking at 1.99. Now, this is probably, I don't know where the current share price valuation is. Oh, share price here. Yeah, I mean, it's not too far off where we are right now. So we'll leave that there. All right, so you're looking at about a 6,951 price jump should they strike oil and prove within a 10% error of margin the estimated output of about 354 million barrels here, right? Now, a lot of people are saying there is absolutely no way this thing will trade above spot 90 cent, 0.9. No way, no how. And I would tend to err a little bit on the side of caution here because the average share price is coming in at 0.98. It's very easy for a lot of people to dream in the big figures here of $2, low share price of 61s. But either which way, a low ball figure here. You see, let me just make this bigger. A low ball figure. If we come across. Low ball figure here is coming in, right, at 0.61. That's a 2,121% appreciation on price. So you think your stonks days are over? They were designated to 2020 and 2021. Well, guess what? The stonk days are back, and it's in energy. All right, so I believe in this, in the ability of this company to bring it home. I don't know what the recoverables are. I think, even if there is oil there, that's not one and done and all's happy lappy for the share price. I think they're going to sell the company to ConocoPhillips or sell the rights to that field to ConocoPhillips and realize a cash day liquidity payout if they are going to strike oil. I don't think they're going to maintain ownership when they strike. I actually think Conoco are gonna investigate it, and they're gonna make an offer before the end of this drilling campaign and the end of Q1, because it's not going to do well for Conoco to have a wildcatter taking what is effectively 30% of their backyard right now. Okay, so that's why I think ConocoPhillips are going to come in with the buyout by the end of Q1. Either which way, I think this is a really good article from Wet Dirt Kirk. And yeah, all props to you, Kurt. So well done. Thanks for the sheet. I thought this would be helpful. There's a lot of people in a lot of the chat rooms in the investment community, of which some of us are part of from the Duggan Capital group. And there's just valuations flying around all the time with little to no calculations done on how we're going to get to those valuations, right? So this serves some group of people as to how to value, and how to calculate your targets for this, right? So going back to the shares, or sorry, the chart. I mean, effectively, at the top of this chart, right? Just to give you an idea, at the top of this chart, that's 244%. That's still at 9 cent. 9 cent up there, right? Just to put this in perspective, if I do this, targets of 60 cent here, right? From here. Up there, this is where you're looking at your 200 or 2,000% increase, right? You're talking crazy risk reward on this thing. All right, crazy risk reward. You're talking multiple thousands to one on this. All right, so that's it for our look at 88 Energy for today. We're probably going to have a look at this as we go down the line closer to the end of Q1 and touch base with how they're getting on with the drilling campaign. What are the results? And results are slow if they send it to the lab. I don't think we're going to have to go and wait for that, but hopefully this is helpful. All right, best of luck. I'll talk to you through the rest of the trading day. Have a good one.